We
Okay.
are.
Alive. Let me.
We are live. Let me.
Live.
We are. Oh shit! Shit! That was my bad. I don't actually know how to share this.
I actually
okay,
need to adjust my neck a little, so I'm.
Let me see here. How do you share something like this?
That was one of my struggles in the first few days.
Okay, well, I guess I will hope that someone who goes live pretty frequently will end up telling us how to actually share the stream to other channels or share. But while we're doing that, we do have a person that said hello, whoever you are. So yeah, I guess let's kind of dig right in right away.
Awesome.
So today we have Yi Xuan.
Yes.
Yes. Unofficially, like I don't know him as Yi Xuan, so I've never actually had to pronounce his name, and not very good at pronouncing Chinese names like this.
Don't worry.
Anyway, so Yi Xuan, you are wear a few different hats, right? And the way I kind of just like look at it or just would describe you is, first of all, you're a very, very, very humble guy, and you're always looking to develop yourself personally, right? And
Yeah,
you understand
thank you so much.
Yeah, and you understand how like your personal development plays a role into your kind of what you're doing professionally here of being a forex trader, right? And besides the forex trading, you also do you also hold REIT workshops. So REITs, for those who don't know, is a real estate investment trust. So essentially a stock company that focuses on investing in real estate. So you do also do a workshop there, right? So hopefully we have a chance to kind of dabble in all those different topics. Anything you want to, I guess, let us know before we dig into this?
Yeah, just a very quickly add on. Aside from the instrument that I currently trade, anything with price, I also look into to trade as well because I'm mainly a price action trader. So in essence, anything with price, anything with a candlestick, I do trade. Yeah, just to kind of clarify.
Oh, that's interesting. So so I guess last week then, what were some of those instruments that you were trading?
Last week was a very, very interesting week. In fact, I had one of my best trading week thus far in my trading career because of the volatility in the market. Thank you. Okay, so just to share a little, the instrument that I've been trading last week was, if I remembered correctly, it was the Aussie yen, because Aussie, as one of the emerging, as one of the currency has been selling down very, very badly. So I took advantage of that. Aussie yen was one, and not only that, some other currencies like the pound as well. The reason being, all of the money are being transferred to the safe haven currencies such as the Japanese yen, the Swiss franc, and even the US dollar as well. So I literally took advantage of all the moves. Yeah.
Wow, that's crazy. But I guess starting with that, like the one I'm most curious about is the US dollar has gone up significantly.
Exactly. Yes.
What happened there?
Well, initially I was as a price action trader, as someone I traded the price action first without questioning what happened first. So I was trading a price. What did the price tell me? I do exactly that. I followed the trend, the short-term trend at least. So, but looking back, and reflecting on the whole movement of the US dollar, for the past few weeks, at least, it has been very, very crazy. What happened was, at the start, at least, when the COVID-19 crisis struck, a lot of people, at least the money goes into the safe haven currencies like the Japanese yen, the Swiss franc, and to some extent, the US dollar as well, because in comparison to other emerging market currencies, USD is relatively safe. And the market was, or at least was quite confident at the Fed, or at least the US government, on how they are dealing with the crisis. So generally for the past 2 weeks, the confidence towards USD has been rising in light of people's confidence towards the US government's action to combat this crisis. So as a result, the US dollar has risen, even though very interestingly, they have been doing the QE4, and as of yesterday, they have announced the unlimited purchase of bond, literally unlimited quantitative easing. In short, free money printing. So even that happened, it did not devalue the USD, but instead USD keep rising as well, which is ridiculous.
Question. I think I have a little bit of a different of a viewpoint. I'm not technical per se, so I'm not sure if I'm accurate. But when I look at it, I feel that it's because there's an equity sell-off, so everybody was encashing. Right? So suddenly then there is a huge spike in the demand for the dollar, rather than, so it was more as a result of the sell-off, and then everybody just kind of shift to the dollar rather than like a flight to safety in terms of like currency to currency exchange. Is there a way to kind of validate all this kind of stuff? I'm not too sure.
Personally, I'm unsure as well. But but what I mentioned, I think, and when in contrast to your question, I think it's pretty much the same. I think that's one of the point that I try to bring out as well. A sell-off in equity, and people are just trying to move to a safer asset per se, right? I think that's your question. Yeah, and I think that's what I was trying to convey as well. And sorry if I didn't make it that clear.
Oh, that's okay. Because you were saying more like people are shifting to the US dollar, right? So what I was thinking is more like from other currency to the US dollar.
Yeah. Sorry, but that is what I'm trying to say. Yeah, I should be more clearer in the next few answers. Yeah.
Okay.
Yeah.
Okay.
No worries.
No worries.
Okay. So besides the US dollar, what happened to the Australian dollar?
I'm not too sure about the Australian dollar. Why is it so? Because I do not follow the country dollar properly as closely as the USD. But what I understand from the US, the Aussie dollar, because whenever I look at Aussie dollar, it has a very close correlation with the New Zealand dollar as well, at least when I trade them. So these two countries are basically countries that are also, I would say, volatile in a way, because and hence the reason why the sell down. And I believe that the Australian government and the New Zealand government they have been announcing stimulus and reducing rates to basically help inject money into the economy, or to help hold the financial system properly during this crisis, which is one of the reasons why their currency devalued so much over the past years. And in fact, Aussie has dropped to around years low compared to the dollar right now. It has been a very crazy ride.
Okay, so when you say volatile, right, do you mean that it's like the currency is volatile, or is the country volatile? Because I'm trying to understand, right? Because you're coming from a technical viewpoint, right? I'm not a technician. I'm more fundamental, so I'm trying to understand, like, what does volatile mean in your language? Yeah.
Volatile in my personal perspective, I'm not saying this for a general perspective, but only on my own perspective. Volatile for me is reaction. Example, if you, as a trader, when I trade, I do look at news announcement, and I try to avoid certain news. And one of the pairs that I avoid when prior to news announcement is the Aussie and the New Zealand dollar, because whenever there's an important news announcement like the employment data, the currency, there will be a significant move, at least in the intraday perspective. Yeah.
Okay.
Okay.
Do you have a
So I
question?
guess, yeah. So I guess moving away from just like talking about forex and all that, you constantly mention the word trade, right? So what exactly is the difference to you between trading and investing?
Yeah, I think this is a really good question because I think at this point in time, a lot of people get very confused between trading and investing. And it's very important that we address these two activities in a very clear dimension, right? So for me, at least my definition to trading is basically we on the price, or whichever method that you are using, fundamentals of, as an example, stocks. If we were to trade the stocks, the fundamental, at least at the long term, does not really matter anymore. It's more like how the price is. What are the price telling us? Are the price pushing out in a breakout pattern? Is the price forming a choppy sideways pattern? And with that in mind, we can trade what the price are telling us. So that is what we do as a trader. We trade what the price are telling us. So this is at least this is my style. And for investing, it's more towards investing in a business that you are very interested in or you believe have the potential to go far more beyond than what they are doing right now. So I like to use this analogy where to trade is like you go and just plug the fruit down, like whatever you see, as long as there is an opportunity, you just plug the fruit down. But investing is more like planting the tree. You grow the fruit instead. Yeah. So yeah, that's what I think about trading and investing.
Interesting. So I'm curious in a small price movement, right? Okay, recently the price movement quite crazy lah, huh?
Yeah.
But the standard understanding is in a small price movement, people tend to leverage trade, right? So do you leverage? And I mean, I don't want you to spill your secret sauce, but I'm just curious, like, do you do any kind of leveraging, or like what is the margins, or how do you then manage all these kind of stuff?
I don't, as of right now, at my level right now as a developing trader, I do not leverage because I'm still building my skill, and I do not intend to leverage for at least for the near future. Yeah.
And for those who don't understand what leverage is, can someone explain what that is?
All right. Let me try. All right. Leverage is like you are borrowing money to buy, at least to invest in the stock, as an example. So what happened is, let's say you are buying a stock cost, you have 10,000 ringgit and you borrow like 2 times leverage, means you borrow 20,000 to invest in the stock. So what happened is, of course, there's an advantage if the stock goes up by by, let's say, 1 times, you'll gain 2 times the return, right? But if the stock price goes down by 1 times, you'll lose like 50%. Sorry, if not too sure if my calculation is right, but you'll lose more than you have the chance to lose more than what you have.
Yeah.
Right? Yeah.
Perfect.
Yeah, it's essentially it's a double-edged sword, and you really need to know what you are doing.
Yeah. And I guess that's a great segue into knowing what you're doing and kind of what you mentioned about, like, you still believe you're a developing trader, right? Like, you don't know everything. You're trying to avoid any sort of leverage. That to me takes a very specific type of mindset. So can you talk to us a bit more about, like, what exactly is what does mindset have to do with trading or investing? And what type of mindset do you go into the day when things are moving, so quickly? How do you stay sane?
Yeah. Oh, wow. I think this is a very good question. I've been trying to not lose my focus throughout the past few weeks when the market have been volatile. But a few questions here, but I'll try to address like a few one by one. So first of all, as a trader, I want to address the mindset as a trader first, because a lot of people tend to have a very wrong assumption that once we go into trading, it's like once I attended a 3 days course and I can smash the market like hell, I can become the next fund manager, the best fund manager in the world, make like 100% a month. Unfortunately, that's not the case. And that honestly, that I must admit, that was my mindset and when I first gone into trading. So I learned it the hard way, as of a lot of people, that it is not the case, right? So as a trader, the core mindset should be you have to build up the skill first. You have to build up the skill first, then followed by the mindset at the same time. Then and only then you can make money from the market. And you gotta treat it as a career, and you gotta treat it like a business. There's no like I trade like as a hobby, right? There's no hobby in it, because the commitment that you will and you have to put into this honing your skill and your craft will take time. I've been doing this for almost 2 years. By end of this month, it'll be my second full year doing trading. So I can tell you honestly, if you are treating this like hobby, it will not end up for you well for you. Yeah. So this is the mindset as a trader. Treat it like a career or a side business or full-time business. You need to really go into this. Yeah.
Yeah. So when you say treat it like a career, let's say there is someone listening who does want to, I guess, who's thinking about it, but they don't know enough about this industry to actually say, whether or not they want to commit. Do you have a suggestion for someone like that?
For someone that is interested to learn how to trade, or you want to take this up, whether you're thinking whether to take this up seriously, my suggestion for you, not to say an absolute advice, because I'm definitely not the master to give you this advice, but my suggestion for you is really have a pile of cash buffer for you to do this. If you want to do this full time, at least 6 to 12 months to really help you out, because it's not going to be easy. You are not going to strike gold at the third month at least, even you are doing all the things right? You gotta gain experience first. So if you want to do this full time, have 6 to 12 months of cash buffer. But my main suggestion for you is don't quit your job right away if you are thinking of learning how to trade, because you have just started to learn. So don't quit your job and be committed to learn how to trade and do your practice your craft at the same time. Do all this together, and once your craft can sustain you evenly as your full-time career, or even more than your full-time career, then and only then you should consider quitting your job. Yeah.
Okay.
But just a disclaimer though, I did all the things wrong. Yeah, I learned it the hard way.
Yeah.
How do you pick up this trading thing?
Sorry?
How do you pick up this trading thing? How do you start?
Well, it's nothing different than a lot of people out there. I went to courses and stuff like that with the wrong mindset, obviously. Then I learned it the hard way and realized that, oh shit, I've been doing this like 6 months or 9 months and I still do not know what I am doing. Then I realized that, oh, my cash buffer is like sucking me up. So I need to like really treat this properly and seriously with the right mindset. And I seek mentors and experienced traders as well. Yeah.
Nice.
What is the kind of mindset that you're talking about? Like, what is the right mindset and what is the wrong mindset? Can we be like, I get it, like wrong mindset is like people that are in a rush, they want to strike gold, they want to do it fast, they think that they go for a course, they can immediately come out and make it work, right? But can we be more specific, like what exactly is wrong about that kind of mindset, and what kind of mindset is right? How should we look at trading? Because I'm not a trader, so I just want to understand what kind of mindset works as a trader.
Yeah, thanks for your question, Reggie. I think this is a very legit one. As an example, right? We look at people like Lionel Messi, Cristiano Ronaldo. They don't attend a 3 days football boot camp and they suddenly become the highest goal scorer in the history of football. But what they do is they go into football, they train, they go into the academy. They started with at least a lower league football club. Then they only proceed up their rank. So this is the same for trading. You need to treat, aside from treating trading like a business, you need to treat trading like an athlete, like a professional athlete. What I mean is you need to be very, very patient. The mindset, you need to be very patient. You need to know that this skill is not something that you can attain in a 3 days workshop. It's not something that you can attain after only giving it a try for 3 months. You need to commit because market does not allow for people that have no commitment to stay and strive. Yeah. And on the other hand, the right mindset is something that a lot of people have a very specific and bad mindset that, okay, if I'm in the market, I must make like $2,000 a month from the market. But this could be realistic, but a lot of time is unrealistic because a lot of people doesn't start with that amount of capital. So, so for me, the right mindset is something like you need to focus on a process first, right? You need to focus on the process first. You need to focus on your mindset first. Then and only then you think about, okay, how much you can make, and that the first two stages of it, the process and the mindset takes years to build. And then and only then you talk about how much you want to make and stuff like that. Then because by then you would have the stability and consistency already. So consistency is the key, discipline is a key. Build these two up and you can talk about money. Yeah.
Perfect. So I guess moving away from just talking about being a trader, what's the difference between like the mindset of a trader and the mindset of an investor?
All right, glad that you asked because a lot of people get this mix. But essentially, the mindset as an investor, the qualities, I would say, the qualities that the trader need and an investor needs are very much the same, although we are doing a very different thing. I'll state a similarity first. First of all, patience, right? As a trader, I need to wait for the setup. As an investor, you need to wait for your opportunity, right? You need to wait for an opportunity like perhaps what we are seeing right now, right? And secondly, we need to have the right mindset, the quality, right? The quality, focus on the process. As a trader, process every day in, day out, the practice. As an investor, you need to focus on the process as well. What are your process? What are your KPIs in choosing a quality stocks or business that you want to invest in, right? And number three, if I want to say, is the risk management, right? So a lot of people do not really care about risk management. It's like, oh, this is going down so much, I'm going it all in. But they got, without the right mindset, perhaps this method is right for certain people, but for a lot of people without a right mindset, they tend to get burned in the market. So these are some of the similarities in terms of mindset for an investor. But what are the difference, right, between an investor and a trader? A trader have a very short time span, at least in terms of the time span of taking a hit or getting stopped out of position, or what I want to say here is a trader have a very fast feedback loop. As an example, I can get in and I can get stopped out, or I can take my profit within like 1 or 2 hours, or even 12 hours, right? But as an investor, you focus not on making money. You need to focus on allowing your money to make money for you. So this is a very different mindset, and this is something that I am still personally developing as well, because sometimes I'm doing trading full times, and sometimes when you try to switch to an investor mode, it is kind of, your mind kind of gets screwed up once in a while. So this is something I'm learning as well. Yeah.
Perfect.
Mm.
Yeah.
then,
So go
I
for
mean,
it.
yeah, you talk a lot about mindset, like which I agree, like patience, focus on the process, risk management. So what are the skill sets involved, and what is the difference in skill sets in terms of like, yeah, as an investor and in a trader? Because it seems like you dabble in a little bit of both. So I'm quite curious, like, what are the different skill sets, not just mindsets?
Yeah. So first of all, one thing that I would like to say is I trade full time. So basically that's what I do day in, day out. I look at the market, I practice. I practice in simulation. I practice in the charts. So one of the main skill that you need to learn firsthand is basically how to look at price, right? You need to understand what are the price telling you, or if you are using some other indicators, you need to learn what are your indicators telling you. It's not that this line cross that line, then it's buy, this line cross below that line, then it's sell. It's not as simple as that. If it is as simple as that, everyone would be crushing the market, but it's not the case. So the one key skill that a trader need to learn, aside from mindset, is the ability to learn how to perceive what the price is telling you. I think this is the most important thing. Yeah, what are the price telling you? Is it going out in a very strong momentum? Is it coming down strongly, or is just a slow sell down? So every movement in the price tells us a very different story. So as a trader, this is what I think one needs to learn. On the other hand, as an investor, I think you cannot run from it, no matter what kind of uh shortcuts you are looking for. You need to learn how to read the balance sheet, the the income statement, and basically the whole financial report. You need to learn how to dissect important numbers from a financial report to understand the business, because at times we know that smart accounting can make certain numbers look overly optimistic. So as an investor, we need to look for these numbers. We need to be very cautious and really need to learn how to filter out some of these numbers. Yeah.
Cool. Yeah. And I think you talk a little bit about indicators, right?
Yeah.
So I'm curious, like, has any indicator that you work with, right, like wrongly inform you, or is it just always like you misinterpreting it in some ways? How long did it, and also how long did it take for all these indicators to start to be more accurate for you?
All right. This is a very good question, because I think I don't get to address this often. So glad that it's being asked. So indicators, there are a lot of indicators out there, the RSI, the MACD, but personally, I don't use all of these indicators because they are lagging indicators. So I use or I only use simple, I just use moving average lines, right? Because that basically complement in my trading, but it is not the main thing, right? One thing that a lot of people get wrong about indicators are they use that as a confirmation to go in, right? But for a lot of better traders out there, right, they use indicators only complement their strategies, right? It's not the main thing that they use to enter or exit a trade. So for me, indicators or even price itself is not of absolute. It's not an absolute thing, right? As you mentioned, there's nothing 100% accurate in the market. So for me, as a trader specifically, you can be right 50% of the time, yet you can still be crushing it the market because of how I control my risks and stuff like that. So yeah, that's how I approach indicators. Hopefully that answered your question, Reggie.
Yeah,
Yeah.
it does. That's cool. Thanks.
Yeah, but anyway, I just want to add on. Think of indicators or price or any trade opportunities or trade setups as something in terms of probability instead of looking for absolute. Yeah.
Okay, that's cool.
Perfect. So if you're okay, but I'm actually more interested in moving on and talking about something a little different. So we've talked about how you wear the trading hat as a full-time job type of thing. Actually, before that, do you do this? Do you typically end up trading more in the mornings, or like a 9 to 5, or do you typically do it more in the in at night where when people are probably sleeping here in Malaysia?
Oh well, I'm a Malaysian, so I need to sleep the Malaysian time as well. but yeah, a good question. The market that I'm trading, or at least the instrument I'm more active with, they trade 24/5. So it is open 24 hours or 5 days. And obviously, I do not trade all 24 hours because there are certain times where prices are more volatile, right? So as an example, the morning session, something from 10 to something from 9 to 11. These are the Asian session where the Nikkei are more, the Japanese side or the Australian side are more active. Then the next session will be, say, the London Open between 3 to 4 o'clock. It will be more active that time. And after that, it will be a New York Open. It will be sometimes 9, 9 o'clock, 9 to 10. Then we'll see certain instruments get more volatile. Yeah, but anyway, all being said, all my preparation, which normally takes like 1 to 2 hours, is done in the morning. Yeah, prior to execution of any trades. Yeah.
Awesome. So I guess you spend a good chunk of your day preparing, executing, reflecting about your trades. But then you also spend another part of your time, primarily, I guess, more on the weekends. And I think we were talking offline before. You try doing it once a month, where you try holding like a workshop around REITs. Right?
Yeah.
So let's move to that. Let's move towards REITs. If you could
awesome.
tell us what REITs are, and then what exactly is it?
All right. So REIT stands for Real Estate Investment Trust, and for those who are not familiar with REITs, it's basically one of the best, I would say, sector in the stock market for you to generate side or passive income, right? So as an example, right? Example for REIT is the best example is definitely Mid Valley, the Gardens, Sunway Pyramid. So because these are some of the really good real estate or properties that as a kid I was like, if I own a brick in Sunway Pyramid, I will be filthy rich. And not until like I was in university then and only then I realized that, oh, I can actually do that. Yeah. So, and we can invest in properties like Sunway Pyramid, we can invest in properties like the Majestic Hotel or Mid Valley through Real Estate Investment Trust. Yeah. And they give like pretty good dividends.
Yeah, so I actually just pulled up Sunway here. I think this is Sunway. So I guess talking more about like REITs and how it works, what makes a REIT something that's worth you looking at? Like, what are some of the indicators? What are the fundamentals that you teach in your workshop?
All right. So why, first of all, why REITs, right? I think for me, why do I focus on REITs so much is because I realize I come to realize that REITs are very good sector to invest in, primarily because they are except for this few weeks, which every sector are experiencing, except for right now, this Black Swan event, REITs are generally less volatile compared to other sectors in the market right now. Look at the oil industry; they got like smashed like crazy. But in terms of the magnitude, REITs are generally still fine. Except for a few hospitality REITs that got smashed pretty hard as well. But generally, the main reason why I like REITs is they pay off pretty good dividends. 90% of what they earn, they need to pay it back in the form of dividend to their investors. So as an investor that likes to build out your passive or side income and receive dividend on a quarterly basis, it would be a perfect vehicle for you. And some of the very crucial thing that I look when I invest in a REIT is definitely their current and gearing ratio, basically a benchmark of how they are managing their debt. As we can see, right now, this is even more important at times like right now because malls like Summary, Pyramid, Mid Valley, they are definitely getting affected right now. So if they don't have enough cash to pay off their debt, their short-term debt, it will be very bad for them. So what I look for is not so is definitely how they manage that, their current ratio and gearing ratio. Yeah, not so much I put focus on how much they earn as well, but not so much because I want to look at how much they first manage their debt. Yeah.
Okay.
Oh,
Nice.
okay. I got a question. So you said like REITs, it's very much a dividend kind of thing, right? That's kind of what you seek for, right? You said that the price are pretty stable in general, right? Am I getting you there? So it's correct, right?
Yeah.
So I'm quite curious then, how does the price move, right? In because I'm very interested in capital gains, not just dividends, right? So how does the price movement of the REITs happen? Why does it go up? Of course, and why does it go down also? Yeah, I'm quite curious.
All right. So I think some of the, at least fundamentally, why REITs would go up and down, right? I'll definitely, one of the main reason is for REITs to go up is when they acquire new properties, right? When they acquire new properties, logically and rationally, that their income will go up, right? So when they announce an acquisition, is definitely going to boost the confidence in at least among the investors. So this is the reason why REITs goes up, and when it goes down, likely is because their occupancy, their tenancy goes down as well. A very good example, look at say Subang Parade. Subang Parade is one of the REIT, one of the portfolio under one of the REITs in Malaysia. And Subang Parade, like 20 years ago, are doing pretty damn good. They are one of the biggest malls, if I'm not wrong, longest or biggest in Southeast Asia, if I remember correctly. But right now, they are being replaced by even more innovative malls like Sunway Pyramid and Mid Valley, right, around the area.
Empire.
Oh yeah, Empire, right? Yeah. So what with that in mind, fundamentally, when Subang Parade, as just an example, right? When Subang Parade are not being the most hottest malls around, tenancy will naturally goes down, right? And when that happens, it will affect the fundamentals of the companies that are holding them under the portfolio.
Fair. Okay, so further on that question, right? You talk about like how when a REIT they acquire new properties, then their net value goes up, right? So their REIT value goes up. So what if they sell properties? Does that happen? And if they liquidate certain properties, does that mean that their REIT price will come down, or how does that work?
Yeah, I think if there are REITs that liquidate their properties as well. But you need to like look at how basically the reason why they sold off certain properties. Example, under Summit REIT, there are certain office properties that are not doing well. So if this officers are not doing well and this REIT let it go, it will basically help take off the needle they are poking you. So it will, in a way, be a positive sentiment to the REIT. But on the other hand, if you just REIT just let it go for the reason of cashing out, and it might lead to a huge spike of dividend for 1 or 2 quarters, but it will not lead to a long-term sustainability. So we need to really study the reason why they are letting these properties go, and hence the reason why, as an investor, you need to know how to read financial statements. Yeah.
Cool. Can I have one more question?
Me first.
Okay, you first. Okay.
So, we kind of talked about REITs as a whole, but there are also different types of REITs out there, right? Could you kind of explain the different types of REITs, and are there different types of averages, like average yields that we can expect.
All right, nice. That's actually the question that Reggie wants to ask as well. All right. Yeah. This is a good one because essentially REITs not all REITs are made or born the same, right? As an example, if you look at YTL REIT is a REIT that manage hotels, right? You know, the Majestic Hotel, JW Marriott, these are all the high-end luxury hotels, right? And look at their price right now compared to let's say a month ago. They got smashed so damn hard, right?
What's the ticker so we can pull it up for people to see?
YTL REIT. YTL REIT.
YTL. Okay. Sorry, continue. I'll pull it up.
Bro?
There we go.
All right. So yeah, you can see it right now. So it got smashed pretty damn hard during this COVID-19 crisis. So REITs like this, hospitality REITs, or we call REITs that manages hotels, or they depends on tourism and this kind of sector that they are in, although they are real estate, these are cyclical, very cyclical or seasonal business, right? There are certain times when it does not do well compared to other times, right? So this kind of REITs, they pay good dividends, right? Even for past 2 years, they are performing super well until now, right? So these are some of the REITs that people can ride the trend during good times, but they cannot hold it when the bad times has arrived, like what we are seeing right now. But on the other hand, there are this REIT called Al-Aqar REIT, ALAQAR. Al-Aqar REIT, they are in the business of healthcare, right? They own hospitals like most of the KPJ hospitals around. ALAQAR. QAR.
QAR.
Yes.
There you go.
Yeah. So yeah, you can just zoom out a little. Yeah, even if you look at the magnitude of how price move, is almost sideways, right? There are really not much of significant up or downs for this kind of sector because mainly people still get sick regardless, right? Even at most important at times like this, people get sick, right? Regardless of the financial situation around us. So businesses like this, they don't thrive very well in good times, but they don't suffer as much during bad times as well because business still comes to them. So REITs like this are in the defensive sector, right? They are in the healthcare sector where people still get sick regardless. So this kind of REIT are REITs that do not get affected much in the crisis that we are facing right now.
Mm-hmm.
Cool. And you were saying about like good dividend, right? Like what is a good dividend?
All right. I think this really depends on a lot of people. You have a very different perspective compared to mine, and a lot of people that are watching right now, you have a different perspective towards dividend, right? But for me, especially in my workshop where I share, my minimum KPI is 5.5% minimum, because anything less than that would be not worth our time for all the effort in researching and stuff like that. Yeah.
Okay. And when you talk about like the cyclical sector, and now that there's a broad market sell-off, right? Then which kind of REITs are you looking at now? Because the sell-off is like everybody is selling down, right? So what is within your radar as of now? And other than like dividend, right? What are other important factors for you?
Yeah, first of all, let's just address the factors first. As I mentioned before this, I mentioned that current and gearing ratio being two of my most important things that I look for when I look to invest in a REIT. So not only that, dividend yield, as I mentioned, 5.5% is very crucial as well for me. So these are three most important things that I look for when I invest in a REIT. So other factors that I look for to buy or not to buy, I look for things like their distribution, in terms of distribution per unit, how much are they paying out to their shareholders? Is it consistent? Is it increasing? That's quite important. And not aside from that, I also, as a trader, I know how to look at price chart. So I also gauge my entry with the price action as well. Yeah. What are the other questions again?
Okay, given the broad sell-off as of now, like what kind of REITs are you looking at, or is there any specific ticker that we can all go and take a look? Yeah.
I don't have a specific ticker per se, but I think as a whole, the healthcare sector, if you want to like shift your capital, I think the healthcare sector is being one of a defensive sector is some of the how would I say, some of the tickers that you should be paying attention of. But at the same time, you should start really right now, if you know what to do, really study the fundamentals of the company, because as of now, REITs are being sold off and in a discount right now. Yeah. But the key point that I want to say here is, it's not about me sharing a ticker with all of you that are watching. It's about you understanding the process to look for some of these potential companies that you want to invest in. You need to know what you need to do, because if I share with you, oh, okay, this REIT is what I'm looking at right now, I may have a very different approach, time frame, and risk tolerance compared to you that are watching right now. So I am not confident that, okay, I tell you this, it'll go out immediately. So yeah.
So we actually have a question from the audience.
Oh, nice.
And the question is, how would you determine the correct price to enter for the REITs? How many lot would you recommend to buy?
All right. Interesting one. All right. This is some of the questions that I would like to use an analogy to answer, because it's as an example, right? You are looking for a boyfriend or girlfriend, and you ask me, right? Oh, is this if you're a guy, you ask me, okay, is this lady is this lady good, or is this guy good enough for me? I might have a different answer compared to you, right? A good price for me might be a bad price for you, right? A bad price for me might be an excellent buy for you, right? So this is a question that I cannot answer you in a very straightforward manner, because you need to know, we need to be in the same line of frequency before I can tell you what is a good price for me. Yeah. And how many lots would I recommend to buy is the same as well, right? I will use back the same analogy in looking for a boyfriend or girlfriend, right? It all depends on your capital and your risk tolerance as well.
Yeah. So I actually want to take a stab at it, kind of answering this question as well. So there is no correct price to buy a REIT, right? I mean, for you, your minimum is as long as it brings, or one of the criteria is if it gets to 5.5% dividend yield, right?
Yeah, this is one of the very important aspects that I know.
So from that perspective, like for you, it might be whatever price is required for me to get that as at a minimum, right? But then from there, it's a question of, well, you don't want to buy it all now, especially in this, given this current scenario, right? Because we don't know what's going to happen a week from now, 2 weeks from now. Heck, we're probably still going to be in this movement restriction for like another 4 months, or sorry, not 4 months, like 4 weeks. That's what I believe, right?
Wow.
But and if that happens, then the fundamentals of a lot of these REITs are going to change, especially if they're not residential or anything, right?
Yep.
So I would say, like, if you're looking to buy into a REIT, you should, once it hits like your minimum price, you should start buying slowly, right? And that goes to the whole, like, how many lots would you buy? I would recommend like, if you have a bunch of money that you're planning to put in, then spread that out over the next 3-4 months. Don't put it all in now. Don't put it all in. Try and time the bottom, because no one's going to know when that is. And by slowly buying in, like, if you know it's already a good buy, then if prices continue to go lower, then it's going to be even better for you, right? So that's kind of my opinion on that. What are your thoughts?
Yeah, just to quickly add on, then again, everyone have a very different approach towards investing, right? What Chong Sun just mentioned is what we call DCA. What's the long form for that again?
Dollar cost averaging.
Yeah, dollar cost averaging. I always have a hard time to get a long form of it. Yeah, what Chong Sun just mentioned is called dollar cost averaging. But obviously, everyone have a very different method, right? Dollar cost averaging is good for certain companies. They are fundamentally strong, and it's not ideal for certain companies. They are more speculative, right? So you need to do your homework and you need to understand your process and really know what you are doing before anything else. Yeah, that's more important than the strategy itself.
Yeah.
Cool. Can I move on to another question? Okay, yes. So you know how the I think a lot of the discussion is not about REIT or not REIT. It's a lot about, do I get a property or do I get a REIT?
Oh
Right.
yeah.
Yeah. So I think that is something that we can talk a little bit about, because I think it is still in the Chinese genome that people want to own a physical property. Right. A lot of people is in it's a societal kind of construct, right? So I talked to a lot of my friends, everybody's first goal is to buy a property. Right. But when I look at it, it's like I personally will go for a REIT because I don't want to manage the property, but I'm quite interested in how you think, how you look at this thing, a property or REIT. Yeah.
All right. So just very quickly for those who are watching, I'll just break down the difference, the main difference between a REIT, investing in REIT or a property, right? So basically, when you buy into a property, at least when you are buying it in a conventional way and you want to invest it, you need to manage it yourself, right? Whatever going wrong with that property, be it say something wrong with the sink, you need to fix it yourself, right? But when you right, very true, right? But when you invest in REIT, you are basically investing not just in that real estate, you are also investing in a team of professional real estate managers to help you manage the REIT. Look at how Summit Pyramid is being managed. It's one of the best best malls that I've ever visited. But of course, I live here, so imagine if you let like some random people handle Summit Pyramid, it will be a disaster, right? That is one. You are professionally managed compared to self-managed, and there's nothing wrong between both, right? And number two, oh yes, Chong Sun.
Yeah, I just actually want to jump in. So as someone who's actually owned a property myself, I can attest to the fact of having to deal with issues, when you're not around, right? So this actually happened 2 years ago, living here in Malaysia, and I got a notification that my water heater was leaking back home in Canada, right? So having to deal with getting someone to go fix it, making sure everything else is okay, figuring out what happened, do I have any insurance claim opportunities here? And I had to do it all virtually, right? So that was a really, really, really big headache that I had to go through. So just putting some perspective of what happens if you own a property and you rent it out.
Yeah. So yeah. Thanks, Chong Sun, for sharing this. I think this is definitely a headache for a lot of property owners. If you do not, if you are unlucky and you get a problematic property, right? So moving on, I think the second difference between owning a REIT or investing in a property is definitely you get to own like really prime properties. Like Summit Pyramid is you cannot buy Summit Pyramid because it has went public. So a lot of these prime properties that you wish to own, you cannot own through a conventional manner like what a lot of people are doing with their own properties. So this definitely, investing in REITs definitely give you access to a lot of like really, really good properties like Pyramid, the hotels that I mentioned, although not now. And it opens up a whole lot more of opportunities. Yeah. And but that being said, the difference between them, I would say for those who have small capital, you can definitely start off with REIT first, then definitely look into properties after that. Yeah, it's not if either or, but it can be an option to consider for you depending on your capability and your best personality as well. As Reggie said, he doesn't like to manage property, and so do me. I'm the same. It's a hassle. Yeah.
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 So I guess I kind of take the other side of this coin. I personally prefer a rental property, if it's bought at the right price and you have a game plan for it, right?
Exactly.
So the reason why I prefer that is because there's a lot of leverage you can take advantage of, right? So if you have the ability, so what I mean by leverage is usually you're not buying the property for full price. Usually you will pay, let's say, 10 or 20% of the full price upfront, and then the bank will loan you the rest of the money, and then you have access to that property, right? So if you were to buy it at the right price, and when I say the right price, I mean more along the lines of, how do we say this? More along the lines of your, like, when to rent it out, after paying all your expenses and maintenance and all that, you actually still have money left over, right? Because that means you are actually, in a sense, creating your own dividend from that. And you have the opportunity to ride out the appreciation if you also bought in the right location. And the idea here is, let's use an easy example. Let's say you buy your property for, or your property was worth 100,000 and you pay 20,000 upfront for it, to, as the down payment, and then the bank loans you the rest of the money. Let's say 2 years from now, the property is worth 150,000, right? And you decide to sell it. That means you made $50,000 or 50,000 ringgit, but you only paid 20,000 upfront, right? And when you only pay 20,000 upfront, it means that you made two and a half times your money back right away. Well, not right away, but like that's the opportunity of what leverage can do for you, especially in the REIT market. So I'm the proponent of, if you can buy a REIT, or sorry, if you can buy a property at the right price that can make sure, then the cash flow will pay for all your maintenance and all your expenses, then buying a REIT or buying a property is probably a good investment option at that point.
Yeah, most definitely.
Yeah.
Okay. Thanks.
Okay.
All right.
So besides
Awesome.
that, I don't think we have any other questions. Let's give these people like a quick opportunity to see if they have any questions for us. So do you deal primarily with Malaysian REITs, or do you also look into Singapore REITs?
All right. So personally, I'm looking at Malaysian REITs, but as I mentioned, the method that I do applies to all REITs around globally. So in my current workshop, I share about Malaysian REITs, but moving on, I may be organizing a special. I'm researching right now in Singapore REITs, and I may be organizing a specifically for Singapore REITs specific workshop soon. Yeah.
Nice. And for those who might be interested in going through your REIT program, how do they get involved?
I actually have a link over here, but what should I do? I'll be for those who are interested to invest in REIT, especially you want to take advantage of times like this. I'll be organizing a REIT investing workshop in May. Hopefully by that time, the whole restricted movement will be ending soon. I'll be organizing that coming soon in 2nd of May, and I only have like 3 more slots available. All slots prior to this have been taken, so I only have 3 more slots. So if anyone is interested, just come reach out to me. I'll just let you know. And all the arrangement regarding the COVID-19 crisis as well to our workshop, I'll just let you know at the same time.
Yeah, and for those who are watching, we also have linked to your Facebook page. So
Awesome.
I'm sure the information's also there, right?
Yep.
Perfect. So one last question, and then we can wrap this up. So
Awesome.
someone wrote something here. Oh yeah, do you guys cross-check with the market movement for
The Dow
a
Jones
bunch of
Index.
different indexes before making any buy-sell decisions?
It really depends. I think this question is meant for all of us, but I'll answer this first. It really depends on what you are trading or investing in. So for me, the instrument that I am in, one of the things that I trade is definitely the US dollar. So I will definitely look at especially right now, how are the stimulus programs that the US government are introducing, how is it affecting the market? Are the market accepting it well? Is it positive or so? So I'll definitely look into that, but it does not quite matter for me because I'm a pretty short-term trader. I trade with the trend most often. Yeah.
So I personally don't really look at futures. It just serves as a interesting thing to see, but it doesn't because I'm a long-term investor. I'm not concerned about short-term movement. I'm not concerned about futures, right? But yeah, that's kind of where I stand. It's just kind of fun to see. Oh, today it's gonna be a good day, or today it's a bad day. It's just something like watching the news. That's for me. Yeah.
Yeah, I'm similar, I guess, camp as Reggie here. So I'm also more interested in like long-term holds. So there are certain companies I'm looking at. They're the only ones I'm paying attention to. And if the index is going down, I'm hoping that these companies also go down because that just means I can buy more, right?
Yes.
Yeah. And I guess that's the main, like the biggest reason of like making sure you always like slowly like inch your way into a lot of your positions, especially if you're like plan to hold for the long term. Because if you don't, that means if you put all your money in at once, you don't have the opportunity to potentially take advantage of any further price movements. All right. And I think that is it. So thank you guys so much for joining us. Really appreciate it. If there are any other questions, feel free to leave a comment. And if you want to hear from any of us about anything else in the future, let us know. And hopefully we can get you back on the show.
Okay.
All right.
Bye.
Bye.
Bye.